Most traders believe that they're struggling because of their strategy, but to be honest with you, that's not the real problem. In my experience, when coaching and mentoring traders, the real problem stems from not knowing what side of the market to be on. And this video should clear it up for you. Let's finish up on pound Aussie. So let's go through some IPDE. We haven't talked about IPDE in a while. We do it every time we look at the charts. We haven't talked about it. IPDE, identify, predict, decide, execute. So let's go through this together. Identify. What do you guys see happening on the chart? We see prices doing what? We are breaking. Have we broken close below already? I'm not too familiar with this one. We are currently breaking and closing, right? It's a long day, right? We're nowhere near the end of the day, but we are currently, right, trading below a previous level of structure. So that's what we identify. Assuming that this is going to hold, right? That allows us to make what prediction? If price has broken and closed below structure, what directional prediction or what direction do we predict the market to move to next? Bearish. All right, so we've got a bearish bias, right? That's the first part of our prediction. Now the question is, okay, well, we know that we're predicting a bearish move. The next part is if price is going to continue bearish, voice is dying, then where are we likely to go bearish to? And there's a cool saying that my mentors once taught me. 5 magical words: look, left, structure, leaves, clues. So let's zoom out the chart a little bit. I have my horizontal line drawn in, which is my favorite tool. Let's ask ourselves, okay, where is our next level of structure? And we can see that our next level of structure or zone is right here. So we are at both, I guess can be true. I just want to draw this out. We are at/in our previous level of structure. And we'll keep track of the lows just in case you're someone that likes to kind of look for the lowest low. So we'll look at the lowest low and we'll look at the lowest close as well to see if we can give you a little bit more range, right? So based on how you interpret this, and this is where it may be different per trader, you may say one of two things. You may say, hey, we are at structure. We are currently testing the lowest close of that structure. We are not too far away, 85, 89, 86 even pretty much, the lowest low of that structure. You may say one or two things. You may say, one, we have already gone to the level in which I would expect price to go to, and there is no more room to the downside. So let's, I'm going to put this on this side. I'm just going to write, we have gone. We have gone, right? And then the other side would say, well, there's still a little bit of room to go. The lowest low is at 85, 89. We can go lower. Now, not to judge anyone, but just to kind of get your opinion on things, which one of these levels, categories which one of these options do you personally see? And again, there's no wrong answer. There is absolutely no wrong answer in this. But which one will you see? So we have gone already, we have gone, we can go lower. Got a few more people typing. And what this is doing, again, this is all in your higher time frame as well. This is setting up your directional bias. This is you, if you're doing this style, obviously. This is you trying to determine, do I want to be a bull or do I want to be a bear? And in that way, by the time you drop down to your lower time frame, you're not trying to decide which way you want to be involved in the market. You already know. Now, in the lower time frame, you're just looking for reasons to support your bias. So we got, we have gone, we can go low. Okay, so we've got most people saying we have gone, which is a horrible way to describe this, but you guys get what I'm saying. You've been here. Or we can go lower. So if you are someone under the category of we have already gone to the lows, when you look at this, are you thinking bearish opportunities to sell, or are you thinking potential counter trend opportunities to buy? Which one? Beverly said, I'm out of the trade because now I'm in doubt. That's another breaking of the rule. Beverly, you got to stop it. You just broke your rule again. You should only exit a trade when your exit reason is hit. More proof of again, my suspicion. I never want to accuse, but my suspicion of not having rules. You can't do that. You didn't sign up for us to be like, yeah, it's okay. You can make mistakes. It's fine. No, like you signed up for us to turn you into consistently profitable traders. And that's what we're going to do. And sometimes it's pretty, sometimes it's not. All right. So we got, for you guys that have said we have gone as far as we have gone, you are going to be looking for potential bullish opportunities, meaning that you're looking at this and you're saying, okay, I'm not interested in getting long or a short, but I'm interested in the exhaustion, right? We've gone short. At some point, the market is going to give us some relief. I'm interested in finding that, catching that relief and riding it back up. For you guys that are saying we can go lower, you are looking for continuation opportunities, right? So you're saying, hey, there is room to go lower. I'm going to try to catch this move all the way down to wherever I think it may go. So this is your directional bias. You've set up your directional bias. So now, before you go down to your trading time frame, your lower time frame, you already know whether you're looking for bullish opportunities or bearish opportunities. There's no more debate. There's no more going down to a chart and being like, should I look bullish? Should I look bearish? And then your mind wanders and creates things. No. You know you're looking for either a bearish continuation trade, and then you can go to your trading plan and find the section that says trend continuation trades, or you're looking for a bullish structure trade. And then you can go to the section of your trading plan that says bullish structure trade. So now as you drop down, now you're saying, okay, well, I know I'm looking for this bullish structure trade. What do my rules say that I need? And then we follow our rules. If I get this, then I look for that. If I get that, then I look for this. We measure out entry, stops, and targets. And then if the trading opportunity makes sense, if all three of those boxes are checked, then we're good to go. Same thing for the continuation trader. You're saying, hey, if price pulls back to this and does X, Y, and Z, then I look for my trading opportunity. And then if everything checks all the boxes, then you're good to go. So that is the process. Phone's ringing, unpopular, sorry. That is the process that we need to follow in a trading opportunity like that. And again, when we follow that IPDE process, it keeps us consistent in our analysis. When we have trading rules to go along with that analysis, it keeps us consistent in our approach to the markets. And that's what we want to be. Hope you enjoyed the video. This discussion and analysis came from our live trading room. And hey, if you're ever interested in spending a few hours a day with like-minded individuals and where we dig through charts and answer questions and talk about other trading and non-related trading things, feel free to join us. We have a London and a New York session. They're both recorded in case you can't make it live, and they do come as part of your trial membership over at www.tier1trading.com, which means there's no commitment, there's no investment. Just come, hang out, learn, get better. Yeah, seems like a great risk profile on that trade. www.tier1trading.com. Look forward to seeing you in the room, and until next time, plan your trade, trade your plan. Take care.